Today is the 12th of December 2012, and again, this video supports December 11th market view report and analysis, concentrating both on the sterling yen as well as the euro yen cross rates. And what we have here is the daily charts on both cross rates as well as the dollar yen and cable. It's obvious that today's market report from the Fed's decision, which everybody knows have driven the US dollar lower, working at 79.70 level. And with the Fed coming into the picture, has increased the volatility of the market. We're currently live right now with the cross rates on the sterling yen working at the 134.43 with extensions at 134.91, which is basically the initial objective. And however, although its momentum has increased and obviously the positive tone and nearing the overbought area on the 73 level on the relative strength index, although the market price action and behavior is quite strong, way above the moving average of 132.29, where it is close to our entry level here, as well as the euro yen. However, we would like to draw your attention here when we presented it over the market view analysis, the 4-hour chart, wherein you could see here that prior to that movement, the configuration here not only represents a W formation, but also a double bottom configuration here, where the opening prices at this level and on this candle bar is basically a double bottom price at 131.95, and breaking that particular consolidation upon breaking the price above this level at 132.49, that had triggered a technically motivated bullish formation for the sterling yen, where we already have declared and confirmed that both cross rates has been reinforced not only by the sentiments of the market, but basically the volumes and open interest on slowly increasing based on the commitment of traders report, which was currently released. However, looking at it here in comparison with the euro yen, there was already a strong up move here prior to that announcement by the Fed, with a low of 106.90. Relatively, that was the starting point or the pivotal point where prices have already signaled a continuation of the reinforced trend that we have seen. And here you would also see that the dollar yen, let's see if we can get it on a much bigger scale, like so, that this particular consolidation, where a not a triangle formation, but rather a rectangular formation, where up and down price swings done, and particularly on the high side from a rising channel. We just recently got a new high at the price level here at 83.29, and in working at 83.20 level. One of the idiosyncrasies of the dollar yen when such rectangular formation and candlestick configuration occurs, a break from this consolidation where the actual trend is higher would have to continue. That is, of course, speaking on a technical point of view, although both volumes and open interest on the financial futures have increased positions on more on speculators and institutionals who are in the market, prompting a dollar yen movement towards on the high side, but of course relatively a contrary price movement with the dollar Swissy. With that said, this also triggered a good fuel for the cross rates sterling as well as the euro yen to move in tandem with the movement of the dollar yen, where the cable is also moving on the high side and currently working at 1.6154. Looking at it on a daily basis, as I've said, that this is a live market that we're covering. This market as of now, which is an hour away from the closing prices for the day, with a possible follow through for Thursday and a more probable correction, a daily correction movement towards the session to session trading between the Asian towards the North American sessions. Euro yen is working at 108.81 with a high of 109.028, where you would see that such movement has been on extreme high volatility, where prices have moved much higher from our original entry point on both cross rates. And considering that Thursday and Friday may have some due corrections, although an opening higher from today's closing with a gap may signal some follow through on a trading session with some mild or moderate pullbacks where prices would be moving lower, then that's the time we'll be placing our trailing stops for these positions to be settled for the day. However, sentiments hasn't changed, so we will still be monitoring the prices, and towards the end of the year or month's trading we'll also be taking our trading break. But however, we would like to justify that such reinforced trends on both currency pairs have been quite lucrative and substantial, hoping that most of you who have watched this video and have been monitoring our market view analysis have been able to get some good trades on those outlooks. Thank you very much. We'll just keep it short and have a good day trading. Happy holidays.